Hey, good afternoon. Trader Tim from eMoney Mind here doing a Monday market analysis video. Before I get into the ES, I pasted a link in the description below with an interview that I did, or actually being interviewed by Eddie Horn from over at Top Step Trader. We had a really fun conversation. He asked some good questions. We talked about, my trading approach, successes and failures that I've had along the way up until this point in my trading journey. And it was a fun conversation, so you can check that out below. The SoundCloud link is there in the description. So if we look at the E-mini S&P today, we can see that we had the gap up in a strong trend day, basically opening at lows and closing at highs. And I've been talking about the context of where we've been gapping a lot in the Tuesday trading room. And so today we gapped up off of a pullback, so gapped up at lows. That is a move that you want to be a buyer of. Gapping up at highs, like over here on the 4th, over here on the 25th, that's a move that you want to be a seller of. So when you're gapping up at lows, that's sort of an initiating move. Gapping up at highs, that's more of an exhaustive move. So I took two trades today trying to get into this gap and go, or the potential for a gap and go. First one I did was a 5-minute gap play, just putting a buy stop one tick above the first candle's high, and that was a 61. And then I used a 6-tick stop on that setup, and I was actually stopped out for that first attempt, and on just a little pullback here. And so then my second attempt was just from the swing low there to highs. And I just put an order at 61.50s and used that as my entry. And then when we get these trend days like this, sometimes I modify my exit approach. So rather than using a strict trail stop on most of the position, I broke it up into thirds like I usually do. I used 2.5 points as my first target, right about at the negative 23% target, so 61.50, and it was actually a 64s where I put my first target. And and then at that point, I move my stop from -6 to just underneath this entry candle here at 60.75s. And then what I did is I put a target out there at 10 points beyond my entry, so 71.50s. Because sometimes when we get these gap days, we go straight up for the first 20, 30 minutes, and then we move sideways. And so to kind of combat that scenario of what if we go up really sharply and then move sideways without any sort of bigger pullback that I could move my stop up along the way, I just threw a target out there in the middle third for 71.50s. And we went pretty much up at a 45-degree angle, a little bit of sideways action just below that target, and then continued upward. So it was, you know, about maybe an hour or so before that we moved 10 points, and I got that middle third hit. And then along the way, what I did is just trailed my stop. So we got the first target hit, pulled back, and then I drew up the next retracement and just put my stop 2 ticks below the 61.8, basically rounding down and then subtracting a tick. So keeping it, this one came just a tick away. It was at 61.75s. We came down to 62s. And then I just kind of followed this swing low up to highs. This one didn't pull back to the 50, but I used 63s as my next entry. It really should have been a 63.25, I suppose, but I had it at 63s. And then I used this swing low, low to high, put my stop up again to 65.50s. We were inching up closer to that 71.50s. You can see a little bit clearer here on the 512 tick chart. This horizontal sideways action, but same thing, low to I kind of used these highs here. We didn't get a pullback, so I just kept raising my stop, moved it up to a 67.50s, and then right after that point, we came up and got the 71.50s hit. And then, let's see, from there, we pretty much kept going up. It got a little bit flatter, but the trend, basically continued. And so on the last third, we kind of had this bigger spike. And on the 5-minute chart, we are about right here at this point, breaking up. And that was down to just a couple of contracts left. So all I did was let the market kind of pull back and make a new high. And as soon as we did that, I moved my stop up underneath that candle's low. The key is it needs to make that new high. So my stop is down here. We get that rally. We pull back, make a new high. And I've said this a lot uh, with trailing a stop. The market needs to break out to that new high. Then you can move it from the prior swing low up underneath the most recent swing low. That's what's creating the swing low, the break into new highs. And so we don't really pull back that deep. So here's the next one. We rallied. We pulled back. Now my stop is still right here underneath the swing low at 73.50s. We go up another couple of points. We sort of drift sideways. 73.50s is still where my stop is. We dip below the prior candle's low by a tick or two. And then once we make a new high right here, that gives me the okay to move my stop up underneath this swing low. And you can see how we continued on, new high, pulled back, new high, bring the stop up again, pulled back. This little bounce doesn't make a new high, so I just leave my stop over here. Then when we get that new high, I brought my stop up underneath the next swing low. The couple of inside bars. Here's that another new high, pulled back, no new high really. So at this point, you've got a high, a couple of inside bars. This is the absolute new high, if you want to call that. Still have my stop down here, basically move sideways. And so that's why you can stay in through some of this chop by looking at, okay, here is the, we're making a little bit of a rally. Boom, we get a new high. We don't pull back yet. A couple inside bars, new high. Okay, my stop is still down here. And then we kind of dip a little bit, rally a little bit, dip a little bit. If you're tightening too quickly, you're going to get stopped out on these little undulations. But then as we get another new high here, then I can move my stop up underneath the swing low that's been established right here. Pull back, another new high, pull back, new high, bring my stop up yet again. And you can see how long. So I took this all the way to, basically I waited, as late as I could, and for me that's the last 30 minutes of the day. So half hour before the close is when I closed out of the trade. And it was only the third of the position that I was able to carry for basically the entire day. But strategically, that's a huge, point-wise, it's a huge move. 61.50s up to about an 85. Super big move, over 20 points. And strategically following the same process I would if I took the entry or if I was just strictly trading on the 512, I'm using that methodology. I'm just using a 5-minute chart because with the trending environment, I like a little bit more time. A 512 tick chart is going to have a little bit more undulation in here, and so it can stop you out. Whereas when I get down to the last third, I've taken profits twice on a position. I've got the last couple of contracts left. It's already a profitable trade. I want to be as conservative as I can, and I'm okay risking 3 or 4 points to make, another 3 or 4 points, which, equates to like 6 to 8 points. So you got to have a little bit of wiggle room in your trail stop to catch those bigger runners. But if you start by taking a little bit off at the start, even if you only have 3 contracts, you can still take one off at like 2, 2.5 points. You can set that bigger target, which, I would have been plenty happy to just get rid of the rest of it at 10 points. But rather than closing it out, closing the entire position at that point, trying to keep at least a little bit on, even if you just get down to one contract and you can just do everything in your power to sit back and trail your stop as best and conservative as you can. It's going to reap rewards if you can follow that same process, every single time, and not try and flip-flop back and forth. And one time, taking the whole thing off at 2 points, and then the next time trying to trail the entire position. If you kind of combine both of them, then you don't have to worry about thinking, do I want to do a arbitrary target or do I want to trail? As soon as you get to 2, 3 contracts, you can do both, and it works really well for catching bigger runners, and you don't have to place a bunch of trades. I A big day for me is 6, 7, 8 trades. I mean, I really do not. Over the years, I've dialed back my trading. I'm only trading the first couple hours of the day unless I get in a situation like this where it's really just kind of peeking at the screen, managing the stop later in the day. But I'm really focusing just on those first 2 hours of the day, and then managing the positions from there, not focusing on quantity, the number of trades, trying to focus on how I can get in a trade and stretch it if it does go my way, as best as possible. So tomorrow morning, Tuesday, live trading room as usual. You can check that out at eminimind.com/VIP. And don't forget to listen to the interview below. Thanks, everyone, and have a great week of trading.